What if I told you that the crypto market is witnessing a major transformation right now? DeFi tokens are rallying, Ethereum just broke above $2,800, and even regulators are finally embracing innovation. I'm Alex from Moonward Capital, and in the next 6 minutes, I'll break down why this perfect storm of positive news could be setting up the next major leg of this bull market. Welcome to Crypto Pulse, your twice-daily dose of actionable crypto intelligence. Today's market is showing us something we haven't seen in quite some time, a significant shift in momentum as multiple positive catalysts align simultaneously. Let's dive right into what's happening and why it matters for your portfolio. First, let's take a quick look at where we stand with our top assets. Bitcoin is holding steady above 108K, currently at 108,509, down just marginally at 1.06%. Ethereum has broken a key resistance level at 2,160 somethings, down slightly at 0.48% but showing impressive strength. And Solana at 159.91, down 2.61% but with potentially massive catalysts on the horizon. What's particularly interesting right now is the sector rotation we're seeing. Data-focused projects are up an impressive 7.33% in just 24 hours, while DFAI protocols have gained 2.29%, and stablecoins are showing surprising strength at 5.56% growth. So what's driving this shift? Three major catalysts are converging at once. First, we're seeing a seismic shift in the regulatory landscape. SEC Chair Paul Atkins has just declared that decentralized finance is aligned with American values and announced innovation exemptions for DeFi platforms. This is a complete 180-degree turn from the previous administration's approach. Atkins explicitly stated that self-custody is a foundational American value, words we never thought we'd hear from a regulator. Second, payments giant Stripe, valued at $91 billion, has just acquired crypto wallet infrastructure provider Privy. This follows their earlier acquisition of Bridge for stablecoin processing. Why does this matter? Because it signals that mainstream financial infrastructure is rapidly integrating crypto capabilities. Soon, millions of merchants worldwide could have embedded crypto wallets as a standard feature. And third, the SEC has requested updated S1 filings for Solana ETFs, with analysts now projecting possible approval by mid-July, significantly ahead of previous year-end expectations. Bloomberg analyst Eric Balchunas estimates 90% approval odds. Let's quickly look at what the market data is telling us. Ethereum has convincingly broken above $2,800, a level it hasn't sustained since its peak. ETF inflows have continued for 17 consecutive days, with total holdings now exceeding 10 billion or nearly 3% of all ETH in existence. In the derivatives market, funding rates have turned decisively positive across all major assets. Bitcoin's funding rate is at 0.97, Ethereum at 0.9, and Solana at 0.70, all indicating that traders are paying premiums to maintain long positions, reflecting strong bullish sentiment. So what does all this mean for your portfolio? The sector rotation we're seeing suggests capital is flowing from speculative assets toward infrastructure plays, particularly those benefiting from regulatory clarity and institutional adoption. DeFi tokens are surging on the news of SEC's innovation exemptions, with lending protocols up 17.59% and cross-chain solutions up 13.43% in the last 24 hours. Meanwhile, May's CPI data came in at just 2.4% annually, below expectations of 2.5%, reinforcing the Fed rate cut narrative and providing a supportive macroeconomic backdrop for risk assets. Here's what you need to keep an eye on in the coming days. Watch for Ethereum's momentum as it approaches the psychologically important $3,000 level. Derivatives positioning suggests we could see further upside. Monitor the integration timeline of Stripe's Privy acquisition for signals about how quickly embedded crypto wallets may become standard for online commerce. And keep an eye on Solana's price action as we approach the updated S1 filing deadline in mid-June, which could be a significant catalyst for the entire ecosystem. The question now is whether we're witnessing the beginning of true institutional integration rather than just adoption. Stripe's acquisition goes beyond simply holding crypto. It represents embedding crypto infrastructure directly into global payment systems used by millions of merchants. With the SEC now viewing self-custody as a foundational American value and accelerating ETF approvals, the regulatory landscape appears to be fundamentally shifting from obstacle to catalyst. That's all for this Crypto Pulse update. Remember to check back in 12 hours for our next market analysis. If you found this valuable, make sure to subscribe and hit that notification bell to never miss an update. I'm Alex from Moonward Capital, helping you stay ahead of the crowd. Until next time, keep your portfolio positioned for the opportunities that matter.